Good morning, good afternoon, good evening, wherever you are in the world, and welcome to the Team McAllister Q2 2026 market update. Let's start off with the big news at the moment, which is the Middle East flashpoint, the war that's going on in Iran. We identified this as a potential risk back at the start of last year. There was tensions already rising, but particularly the protests at the beginning of this year have spilled over into full-on military conflict with America and Israel actively targeting Iran. So the war in the Middle East has become very, very active very quickly. So now we see a coalition of Israel and America actively targeting Iran, and as a result, markets have reacted quite quickly and quite dramatically. But the signs were there prior to the conflict actually starting. 2026, though, as we expected, has started to enter a correction territory in a number of areas. The riskier the asset class, the worse it's performed. So what we're seeing, for example, is a sell-off, particularly in Bitcoin, that has dropped nearly 20% so far year to date, and that was after dropping 6% in the tail end of 2025. Other asset classes also down. What's gone up, though, dramatically, commodities, precious metals as well, still trending up slightly, but showing some signs of weakness. So prior to the war, we saw gold and silver rising dramatically in what we would call a parabolic advance. So getting up to about sort of $5,600 in the gold market, you'll see on the left-hand side, and the silver market getting up to about $125. So we've seen these kind of chart formations before, particularly in the crypto space. Anyone that follows cryptocurrency will be well used to seeing these kind of moves. We refer to them as a fear of missing out, or a FOMO movement. So gold getting up to that sort of level results in a lot of people saying, look, is it time to buy? Well, generally speaking, when a lot of prices advance at this kind of level, the answer is no. We wouldn't recommend buying gold and silver in these kind of territories. We were, however, recommending looking at it a couple of years ago, 3 years ago in particular, after the last 2022 big correction. It was time for buying those kind of asset classes. But right now, we're really concerned that could have been the top in that market. And these price drops happened very rapidly in a Friday afternoon session before the war started. So if you look at silver there in particular on the right-hand side, it dropped 30% in an afternoon. That normally indicates that there is what are called leveraged positions or leveraged traders. And those kind of trades are the most dangerous ones, particularly if they are retail investors that do that. So if you take, for example, a 100 times leveraged trade, what someone will be doing is, say, put $1,000 into that trade. If the price moves up 1%, they double their money. Likewise, if the price just moves down 1%, it actually completely liquidates that position. They lose $1,000, and that adds to the selling pressure. So that's what we saw there before the war even started. And then obviously at the end of February, the war really kicked off. So now what we're seeing is a significant correction in a number of areas. It's to be expected in these kind of situations. So the S&P 500 now down more than 5% in 2026. Getting close to a 7% drawdown is a significant movement. And why is that? Well, people are starting to get concerned around a potential recession. So the oil shock that we're seeing in the price of oil going up dramatically is one thing, but in history we've seen this before. It often can trigger a recession. So a number of markets selling off because there's concerns that there might be recession on the horizon, and the spectre of what we call stagflation, so a stagnant economy or a recessionary economy, whilst also we're seeing rising inflation. So something similar to the 1970s is potentially starting to form. So what we've seen as a result of, or since the war started really, is a dramatic increase in the oil price. So you'll see there heating oil up 80%, Brent crude, the benchmark for oil around the world, up 54%, and other commodities following. Why does that happen? Well, because oil runs through everything that we use, whether we like it or not. Everything will arrive at our door via a ship, and then onto a truck, and then potentially other sort of logistics around all of that. So the price of oil really does impact the cost of goods and services around the world. But it's a high oil price is something we've dealt with before. Likewise, we've seen really low oil prices before. We only have to cast our minds back to the COVID era, and oil was trading at negative $13 a barrel. So people were paying people to take oil off of their hands, and that seems farcical now. But again, it just shows that oil is just a market like any other, willing buyer, willing seller. And right now, because of the concerns around supply and what's going on in the Strait of Hormuz in particular, we're seeing the price starting to really scale up quite dramatically. This chart shows then what's happened since the start of the war right up till today. And the oil price there, like you see, is now trending back up a little bit. It's been up and down since its peak. Why did it trend down? Well, there was a possibility that we might have a deal on the horizon. Trump seems to be very keen to now indicate that the Iranians are going to capitulate. The Iranians are saying they're not having any of it. But through the same period since the war started, Bitcoin, as an example, the riskiest asset class that we often track, I often refer to this as the parking sensor on the front of the car, flat at around about 2.72% over the same period. Meanwhile, gold and silver down dramatically since the start of the war. So gold down 15%, silver down 24%. So if someone had said to you before the war started, what will happen in a war scenario in the Middle East, I think everyone can agree, oil would go up. That's pretty obvious. But they probably would have said, precious metals, the safe haven assets, the likes of gold and silver, will go up a lot. Bitcoin as a risky asset would go down. But actually what I'm putting out here is that these asset classes have moved already. They are forward looking. So the fact that gold and silver has gone down through this war is actually indicating we're more likely to see a peace scenario rather than World War III. But things can change. I'm just saying that that's what the market is kind of signaling to us at the moment. Other things that have changed, the US interest rates cuts stopped dead in their tracks. So this is something for clients that have been showing this chart since 2022. If it's going from bottom left to top right, so interest rate cuts are likely to happen, then risk assets and other things do well. When interest rates level off, it can mean there's challenges ahead. And in 2022, we had the opposite. We had interest rates rising. So what we now have is a potential situation where we might see rate rises if this conflict carries on for much longer. If we have a peace scenario, we might potentially get back to interest rate cuts. But right now, the market is saying it's going to stay where we are at the moment. So everyone's really sat on the fence waiting to see what happens in the Middle East. What does that mean then from a South African perspective? Well, we've seen a weaker dollar over the last year or so and stronger gold. Whenever that happens, we see a strong rand. We pointed out, though, that with those circumstances, there's a likelihood of a change of tack, and that for clients that are thinking about moving currencies around the world, I said about a month or two ago that it felt like about as strong as it was going to get. And we're seeing that now playing out as the currency weakens again. So, if this trend of gold weakness continues, the rand will continue to weaken. That will push the cost of goods and services up in South Africa as well. So now we're only negative 6% on the dollar rand chart over the last 12 months. And again, this shows one of the things that I always talk about, which is fear and greed in the market. So, remember when the tariffs were happening back in April 2025, we were at nearly 20 to the dollar. And my advice to many was, look, this will pass. Don't panic, don't rush to sell into dollars, when the rand was weak. Conversely, what I was saying just a few weeks ago is it's an opportunity. So that time was, I feel, probably the best time that we're going to see for exchange rate. We're still not at a bad exchange rate right now. We might potentially go back and retest those kind of levels, but it kind of feels like we've bottomed out and we're starting to trend in the other direction. But the gold price really is the thing that was going to indicate where currency is moving overall from a rand perspective. Again, for those that haven't seen these slides, I'm still warning that there is this American risk to South Africa. Why do I say this? Well, there's a load of breadcrumbs on this trail. It goes back to the International Court of Justice action against Israel, which is really backed by Iran. It goes on to the G20 and Trump not coming up for that, the Africana refugee scheme, which is Musk blowing in Trump's ear. And now they're looking to replace South Africa with Poland at the G20 in America next year, so Cyril won't get an invite. I think the final straw that might have broken the camel's back, though, from America's perspective, was this naval exercise just a few weeks ago. So in their wisdom, the South African government thought that they played boats off the coast of Cape Town with Russia, China, and Iran. Interestingly, that Iranian vessel has now been sunk as part of the recent conflict. What does that really mean, though? South Africa has clearly aligned themselves to Russia and China and Iran. And with what's going on in the Middle East, if it goes on for a long period of time, it becomes even more strategically important as more and more of the shipping logistics around the world travel past South Africa. So the risk to South Africa is that clearly Trump is not a fan, and he might start to take action on all of these points. And what could that look like? Well, it could look like sanctions, not maybe as strong as they've been against the likes of Russia, but potentially it could be things like telling American investment managers they can't buy South African government debt, government bonds. If they start to sell those all around the same time, that could potentially cause a devaluation of the currency. What it will also do is inspire fear in overseas investors. So particularly, the property market down here feels like it's cooling off a little bit already. What you could see is foreign investors starting to panic in that situation. So again, a lot of the future of South Africa is in one man's hands, and if he decides to really target South Africa, there is very little that South Africa could do about that. So again, my general advice for all clients is if you have South African cash, South African assets, if you're thinking about disposing of those whilst the market is strong, property market, is quite strong, it's not a bad time. And if you were coming back to the market in a year to 2 years' time with more rands because the currency's weakened, you probably find the property market will have weakened around the same time. So a good time to export rands and buy dollars potentially. And the final thing that this all feeds into is this sort of crazy idea that I have around a Trump peace prize. My theory on this is very straightforward. He's, I think, pathologically obsessed about things that he can't have. And the one at the top of the list that he seems to keep going on about above all others is this peace prize, which seems ironic when we're talking about bombs falling in the Middle East as we're recording this. So what's the potential roadmap to this? Well, Trump could potentially engineer peace in the Middle East. Gets Iran to play ball. Potentially we might see regime change there. The Shah of Iran might come back. There might be a ground invasion led by the Kurds in the north. We just don't know. But if he can engineer peace in the Middle East, he could claim that that was all his doing. One of the things, though, we have to remember is that Iran are a key supplier of military equipment to Russia, that they're using that equipment in Ukraine. So if that starts to happen, Russia is likely to be involved in the discussions. And what it could mean is that actually Russia might potentially look to negotiate peace in Ukraine at the same time because they lose their supply line through Iran as part of that deal. So if that plays out, what we could have is peace in the Middle East and peace in Ukraine within the same sort of window, and Trump will stand there and claim that it's all his doing. Part of that deal would almost certainly be that Russia comes off of sanctions, and there is already chatter, as I've already mentioned to some of you last quarter, that the value to the global economy of Russia coming off of sanctions is about $12 trillion. So everyone getting back to a period of peace and cooperation sounds absolutely crazy right now. But I think that is what the gold market is potentially signaling, is that the worst may be behind us, but it's still very uncertain time. So I'm very cautiously optimistic that Trump gets his way around peace for the world. But if he doesn't, then we could potentially have a more hostile situation that we have to deal with. Let's wait and see how it all pans out and the impacts on markets as a result. What does it all mean for your portfolio? Well, the team will now be sending, if they haven't already done so, your latest portfolio valuation. We can talk through the individual movers and shakers. We have seen some pullbacks in some areas, as I've just talked about. I'm cautiously optimistic across the board. If you specifically want to talk through, the movements in the portfolio, I'm always available to discuss that with you, or ask your allocated team member who will be able to explain it further. But this period of uncertainty, I'm sure, will pass, like it has done many times before. In the last 10 years, I think of the things that we've handled as a team in the markets, from COVID through to the Red October of 2018, through to the 2022 sell-off and the bounce back in technology. Markets go in cycles, and the important thing is being able to respond to those, stay invested for the long term, and remember that we are long-term investors. The market will always reward us in that long-term journey. Thank you for listening. Obviously, this is not financial advice. This is a market opinion, market update for those that we work with, and also those that we might potentially work with in the future. If you feel that this content is useful and you'd like to learn more about Holborn and how we could potentially help you and your global financial journey, don't hesitate to reach out to us on the details below.